Hi there, this is Tencent. Today we're talking about a Chinese company that has changed the technology landscape in China. Even though the Chinese government tried to limit the monopoly control over the Chinese economy, the company is still able to continue to grow in China, as many customers love the experience in the company. The company that we'll be talking about is Tencent. So in this video, we'll be talking about whether Tencent could still grow despite its competitive landscape. Before we continue, please smash the like button, and if you'd like to see more such videos, please subscribe to this channel. Firstly, let's talk about the business model of Tencent. Tencent is the world's largest video gaming vendor as well as one of the most financially valuable companies. It is among the largest social media, venture capital, and investment corporation. Its service includes social network, music, web portals, e-commerce, mobile games, internet service, payment systems, smartphones, and multiplayer online games. Offering in China includes the instant messenger Tencent QQ and WeChat, and one of the largest web portals, QQ.com. It also owns the majority of global music service, with more than 700 million active users and 120 million paying subscribers. Secondly, we'll be talking about the reasons why there's a lot of hype in the stock. The first reason that we'll be talking about is that the Chinese economy is recovering at a faster rate compared to its peers. Even though China was once the epicenter of the outbreak, the Chinese government was able to lock down the economy successfully. This keeps the spread of the virus to a minimum. Once the government has eradicated most of the virus, the government was able to reopen the economy slowly and steadily. There wasn't a lot of hiccups during the reopening. This allowed the economy to grow steadily past its pre-pandemic level. Moreover, Chinese adapts to the current business environment in China. Given that most of Tencent businesses perform well in China, this is extremely great for the company as a whole. The second reason that we'll be talking about is that Tencent is entering the driverless market. Tencent has teamed up with Chinese automaker Geely on driverless and smart car tax. The deal will see the two work on areas in the field of digitalization, intelligence cockpits, autonomous drive, and low carbon development, the company said. This will include making the development cycle of a car more digital, adding smart applications to driver's cockpit, and eventually exploring autonomous driving system. Tencent has a cloud computing division and develops AI application, which could be useful when it comes to the automaker sector. Geely has been looking to boost its tech powers through partnering with major technology firms. In January, Baidu created a standalone electric vehicle company with Geely as a minority shareholder that was responsible for manufacturing the vehicles. Finally, we'll be looking at the reasons why there has been a slight correction in the stock recently. The first reason is due to investors taking profit in the stock. Even though the company posted great results, the fact that it runs up a lot has frightened some investors. Hence, they decided to cash in their profits. On top of that, investors are taking cues from the American market and move a significant amount of money into the reopening trade. This greatly affects the stock price of Tencent. Furthermore, some investors are waiting for Tencent's 2020 result for the fourth quarter and full year, which will be released in March. Analysts are expecting revenue to come in at around 132 billion yuan for the December quarter, a 24.6% year-on-year rise, according to estimates. Net income is expected to grow nearly 29% to 32.85 billion yen. Tencent is known for its huge gaming businesses, which analysts expect to have performed well in the fourth quarter. Revenue from smartphone gaming in particular are expected to grow 46% year-on-year to 38 billion yen. helped by new titles release, according to a recent note from Jeffries. Other analysts have also backed that up, but Tencent has also been growing other areas of its business including advertising, cloud computing, and financial technology via its WeChat Pay mobile payment service. WeChat in particular has become a focus for investors. The second reason is due to Tencent executive being held by Chinese officials. Tencent said on Thursday the case of one of its executives held by Chinese authorities is linked to allegations of personal corruption and is not related to its international messaging to payment WeChat app or domestic VSIM platform. The Wall Street Journal reported earlier a Tencent executive has been held by Chinese authorities as part of a probe into a high-profile corruption case involving one of the country's former top law enforcement officials. Citing people familiar with the matter, Zhang Feng has been under investigation by China anti-graft inspectors since last year for allegation unauthorized sharing of personal data collected by Tencent social media app WeChat. As Tencent is getting more powerful in China, the Chinese government is making sure that it has tight control over the company. In conclusion, due to the rise in popularity of Tencent, the Chinese government started to clamp down on the company. One is to make sure that there is no corruption in the company. Two is to make sure that these big technology companies do not have a massive monopoly in the market. Even though these interventions may be bad at first glance, it is extremely important to make sure that there is no monopoly in the market. This will allow other technology companies to innovate and stay relevant. Hence, I strongly feel that Tencent is a buy, but not at this level. With that, thank you and have a nice day. Goodbye.